Oh, I'm sorry, just because I have a couple of bad days and I have some attitude on that video. Is not everybody's saying, "Oh my God, you're so negative about George." Am I negative about George? Of course I am, because he could have done better. But if you've done enough DD or people DD on him, you will realize that his behaviorism or his way of managing a company will never change. So a lot of times I don't even want to mention it anymore because a lot of times people just don't change. And some of you will be like, "Oh, are you salty because George didn't hire you?" The plan of George hiring us is literally impossible. When we made that video, we made it because A, I thought it would be really funny, and then B, I thought it would be a really great way of pushing the PR to let people actually know that this thing exists. But hey, like if George actually hired us, we're not gonna even be in this place in the first place anyways. Okay, let's talk about another question that people are asking in the comments. You guys are asking me, am I still bullish? Like what is the time frame we're talking about in the next year? Well, it really depends on whether we actually gonna get our dividend payout or not. The reason why I said whether we would is because if they eventually sold the land for less than $2 million, which the probability is pretty low. So right now it's about 8%ish, 5 to 8%, okay? 5 to 8% chance that it's gonna sell lower than $2 million. And if you actually read the bylaws, you'll realize that it's not really exactly $2 million. It's $2 million plus all of the transaction fees and all the legislative fee, all of the fees. So if we count all of that, that means they have to sell for more than about $5 million, somewhere around there. So then, also I'm pretty sure they have to get a pay cut or whatever because our preferred shares have the lowest liquidation preferences, if that makes sense. If you guys want me to, we're gonna push out a theory where number 2 and I we're gonna talk about like some basic term sheet understanding of how liquidation preferences work and how a lot of these little preferred, little common A share and B share transfer control works, like how does liquidation preferences really affect you, what is the difference between debt and equity, what is the difference between regular shareholders, passive investor, and all those kind of like simple business terms. Because as far as I know, a lot of you guys actually just started trading or haven't even got any like normal business school education or whatever. That's why you guys are asking those questions where it almost feels like it's bound to sort of end up in a losing trade. Or if I put it in a nicely way, it's lack of significant educated guidance. Let's just put it that way. And to go back to that original question is, am I still bullish on the stock? Yes, in 6 years, I think it's going to be around $30. Do I think by George doing the right thing and George understanding his core customers more, it will speed up the process? Absolutely. And I think he should be doing that. And the fact that what they've been doing with sales and everything, you see that this company doesn't really have an elaborate sales team. And a lot of you are going to be like, oh, it doesn't matter if you have your sales team or not. If you look at Tesla, they don't even have a PR. But it's different because Tesla already have a elaborated sales plan and it has Elon to do all of his PR. But for a company like MMAT Materials, I'm gonna get you like a $5 bet, okay? For all of you, just go on the street and just pull up a random girl or guy somewhere from like, I don't know, a car or whatever, someone you think seems affable, and just ask, hey, do you know what MMAT Material is? Like not the company, but just the stuff. They're gonna be like, what? Yeah, I actually did some customer diligence. I went out on the street for about 5 hours and then asking people, do they actually know what MMAT Material is? Only I can count it with my single hand. I've interviewed 50 people, only around 5 people, 10%. Probably even less than that if you have a bigger sample size. Most people don't even understand the implication of MMAT Materials and why do we need it, right? That is bad PR. And then if you look at other competitors, all of MMAT Materials competitors are operating in different verticals. And what George have done is he spread himself too thin to an extent where the burn rate is going to be very crazy around 2023. So what we're really looking at is as investors, I'm not like talking about this in a company operation standpoint, okay? Because as far as George is concerned, he has about $150 million on hand. And if we just calculate regular burn rate, it will probably last him about 5 to 6 years. But because the burn rate accelerated over the past 3 months, so probably let's just say it will last him for 3 years. So around 2024, he still have around three years to go by and figure out another way to sort of improve. He has time, but a lot of you don't, right? A lot of your liquidities are tight. A lot of your trading was, like a small position or whatever, or some of you are trading on like a couple of $100, and you guys are the most hasty ones. For people like, Cap, Crunch, and I, or like number 2 or whatever, our positions are significantly bigger than a lot of other people. Like for example, for right now, I'm like around 50% down, and then I'm losing about 10K plus the option losings and plus the cost of rolling options. That's around 12K. That means I have at least 24K. Yeah, at least 24K holdings in this company. And that might even be like a combination of all of your holdings combined. Like it's super unfair to ask us whether we're still bullish or not. We don't have any choice until we started selling shorts. But at the same time, what you have to understand is there any more money to be made by selling shorts? Like I've already explained this in previous videos, right? It's not my fault that you guys don't listen to the end or you guys don't interpret what I'm saying. Right now, the stock is already at $3.5. And I haven't checked the stock today because I've been making other videos, okay? I've been making a very detailed video of sort of like a roadmap for MetaMaterials to hit in sort of revenue projection for the next few years. I'm thinking about putting that as a Patreon content, and I've made about 4 videos on George's personal DD, and I made a video on their patent, when they're filed, what company they're registered under, and I made some really detailed DD on a lot of those balance sheet stuff, the good stuff and the bad stuff. Even though as far as right now goes, the bad stuff is bigger than the good stuff. But we all know the reason why we are here is because we invest in the future. Maybe we're here too early, right? Or maybe we can just be completely wrong because, nobody can be right all the time, right? I said to myself, I cannot be right all the time. There's at least 10% chance that I was wrong. And if I'm wrong, I basically lost 10K. And then, that's just tuition I have to pay, right? It's a tuition I have to pay for the market. But a lot of you who are trading with, your kids' college fund or whatever, I have to be responsible for you guys too. Like the reason why I didn't jump ship is because I saw this growing community. And I was like, yeah, I need to educate these guys and help these guys not to lose money. And that's the point. I have to present you the most honest opinion with the facts here. All of my opinions are based on facts. All of my opinions are based on data, from numbers, from their financial statement. Right now, they don't have a SEC-proof audited financial statement, so we cannot make further speculations. So all of our speculations are only based on all the information we have right now, right? For example, in this video, I'm going to talk about the partnerships and development. On their website, they said one of the biggest development is, they did a reverse merger with Torch and become the first metamaterial company listed on NASDAQ and changed name to MetaMaterials Inc. This, on the surface, just tells you, oh, this is so great, it's the first metamaterial company, and changed name to MetaMaterials. But if you were a hedge fund, if you were like me, what they're really telling you is, okay, it did a reverse merger, it changed name to MetaMaterials, that means the old short positions haven't covered yet. That also means that whatever carries around was Torchlight beforehand, all the bad and all the good press, all the bad press, all of them are following this new metamaterial companies. One of those things when you're doing a DD on a reverse merger, when you're working in accountancy or as an accountant or as an M&A specialist, is you have to do diligence on the company beforehand, right? So for example, Torchlight carries certain lawsuits. But because they have their ways, the lawsuits go away. But also how Torchlight operates is basically I bought into a underdeveloped land. I can find oil because I have expertise of finding oil. Let's just say they all have the expertise of doing that right now, right? So based on our we want to trust Greg because Greg have at least 35 years of doing whatever he does as a geologist finding oil. Let's just say, we're 80% sure that this oil actually worth $3.25 billion, like the entire reserve in that land, right? Despite a lot of, researches or whatever, the FUD are talking about online. Let's just hypothetically, let's just say every single information we had on Torchlight is correct. But that piece of land is not going to sell for $3.2 billion. No, it's not. A lot of you are so naive. They're like, oh my God, it's worth that much money. That's not how it works. It's the same thing as an iPhone. Okay, iPhone is not sponsoring our video. Okay, we're just making it as an example. An iPhone on hand is gonna be worth less than the iPhone out of the box. Does that make sense? The same thing as when you don't have any equipment to actually use to sort of excavate the oil, the land price will be significantly less valuable to the bigger boys. Because what the bigger boys really want to do is, all right, I have a lot of money. Like, I don't need you to tell me they have a lot of oils here. I can go to other places where they have all the equipment I can use. All I have to do is just renovate a little bit and I can start excavating. Because they already have the license to do so anyways, right? So why would I invest in a new piece of land and just, put up a couple $1 million up front? You have a sunk cost period of time that's around like a year and a half, and then wait until you can actually operate that land. You're already on year 2. That's the harsh reality of the oil industry. And then the actual cost of producing a barrel of oil is actually around. I don't want to actually put a cost on oil because a lot of you are saying it's $35 to $45, but due to my research and the way how I do research, it fluctuates in a way depending on the global supply chain. But let's just suppose it's $40 per barrel, okay? That's the cost, right? And because the government want to put the oil at a relatively low price because, it's major cost of inflation. So then what these big boys have to consider is, all right, the cost is $40. If I put that much money into this piece of land, I have to waste another year. And if I just put the money to acquire another company in the other places, I can probably make more money that way. That's why all of these oil lands are traded at a discount. Does that make sense? That's why oil's $3.2 billion fantasies never will come true. That's why the $20 dividend is literally impossible to have. Impossible. Unless the oil price actually increases to $100 or $120 and it stabilizes there. But if you look at the oil futures in the past few years, or in the past just the past few months, you'll realize that the stabilization of oil is literally impossible. Volatility is foreseeable. So then all these companies, all of these big boys, including COP or Pioneer, all the British Shell, what they're trying to do is they're trying to utilize their cash the most efficient as possible. They want to utilize, they want to buy into a land that is already developed, have the equipment in there, and I would just excavate and deplete all these things, and I would just move on to another thing. And by doing that, you have recurring revenue, so you can actually transition the major oil dependent industry into a more greener sort of way of providing energy. Is that really green? That's not really for the topic of this video, correct? Yes, exactly. And then by being green, they can sort of, but the dilemma is here. By being more green, that means the cost of oil production will increase over time. Does that make sense? Because less and less people will produce oil, which makes the oil supply shock inevitable. So we're literally entering a vicious cycle here, right? Anyways, I think I went off topic. This will just be a video on its own, okay? And the second one is sign 10-year lease for expanded, 68,000 square foot headquarter facility to include new customer centers. This is a good thing. And then the fact that the person who actually, leased them the thing wanted more option from the company is a good sign in the long run. But if you're a landlord, a 10-year lease, what you're really trying to make money is after 1.5 year mark. Okay? You can verify this with number 2 because he does a lot of real estate stuff. And the cost of the option that the owner of this piece of land that leased this piece of land to MMAT Ontario, their cost of option is $3.21 in March 2021, which means after reverse split, their cost basis is around $6.6, which is very consistent with my own price for analysis from a few weeks ago, correct? So there's nothing wrong with the calculation. It's all about the public perception that's driving this company down. And because George doesn't fail to do any PR or refuse to do any actual good PR and just following the footsteps he has been doing for the past 10 years and refuse to adapt, they're putting it in a bad way is he's holding us hostage because he could have done better to make the company more liquid, but at the same time to drive the stock price higher. I'm not saying that he's doing it intentionally. I'm just saying because of how he operates for the past few years, I'm just salty about it. I'm not being negative, I'm just salty. And due to the fact that yesterday I was actually in a hangover, that's why all my videos sound so negative. But I'm actually not that negative, I'm actually pretty positive. Because I'm actually not worried about any like volatility ahead or whatever. I actually wish it's gonna just stabilize at 3.5 bucks. Because what I can do is I can just regularly do my capital management stuff and trading some options and doing some elaborated spreads, and I can make a constant return every single month. But that's probably not going to happen. Because what the shorts want to do is they want to drag the price as low as possible so then they force George to do a reverse stock split. But by the time George decided to do another reverse stock split, it's already too late. The boat's already sailed. So he has about 6 months to really figure out what he's supposed to do before, not even 6 months at the point, you have around 4 months time before the torchlight, liquidation of asset complete, if that makes sense. And collaboration with Sakitsu Chemicals, or Suzuki, whatever you could pronounce that, to improve performance and coverage for 5G and 6G communication network. This I'm going to cover in the next video because I think this video is getting too long. All of the way that how George developed and how George formed partnerships is all about sharing principal IPs. But what ended up happening is the company that they're partnered up with ended up owning the IP, or ended up owning the very important part of IP, and George ended up owning the IP that's more of like a integration or more like a combination IP per se. So George still needs these OEMs or still needs these suppliers to sort of supply him the raw materials or supply him the raw patent or raw intellectual property to perform or to produce something that's the end product that George is selling. That makes George's margin a little bit questionable, but that's for the next video, I guess. And acquired asset and IP from Swiss lens manufacturer Interglass to develop AR fusion augmented reality eyeglasses with support for integration prescription lenses. The prescription lenses part is really great, but what George needs to realize is what's the actual demand for AR and VR glasses. Like, I would imagine that B2C sales actually pretty suck, unless they actually produce a lens that's super non-expensive. But the meta material itself is expensive, so there's no way that would produce something that's super cheap that can, that average Joe like us would be able to really afford. So what he's really targeting for is the B2B market. But does he really have anyone on his team that understand the B2B market on the AR segment of the market? No, they don't. Okay. I've been doing DD for years. We've entered national, international competition. We've done internship work for venture capitalist firms. We have mentors who works in VC, who works for private equity, who value our work really highly. And let me just tell you, by doing the people DD, the more I've done, the more I'm swaying to the natural side for the stock, at least in the short term. Unless George can actually specifically hammer down a deal with the Japanese manufacturers, OEMs, or he can sort of figure out another way to boost his development revenue. But when you enter the GAAP accounting method, the development revenue is not actualized the way how IFRS works. Okay, now I'm getting to the more accounting side of things. You see, sometimes I wish I can just put everything so simply to you guys. But because my brain is operating in such a high RPM, it's really hard to sort of try to condense everything in a very short video for you guys. And a lot of you guys just want to hear, what do you think this price chart is gonna be at? But a lot of times the problem is not as simple as that. The problem is in this company you have the people problem, which leads to PR problem, and you have the tech problem. The tech problem is not really a problem. It's just that people don't understand what they should be using the tech for. What the tech, or more like a go-to-market problem. And then when you have the go-to-market problem, then you have the burn rate problem. When you have the burn rate problem, you have every other problems. I mean, I wish I can just, sit there and talk to George and maybe provide an interview. But the fact that I'm not really such an affable person, I can just go up to someone and ask them questions without triggering them. So that might be a problem. But if any of you guys think this would be a great idea to interview George, please comment down below. I'm not really sure George would accept our interview though. But hey, guys, if you like these kind of content where I just go off and talk about what I really think about this company, and I have to be responsible to you guys, okay? Whatever I think, I will tell the truth on screen or on YouTube. I'm not gonna be like anybody else. Like for example, a lot of AMC streamers, they already know that the doomsday is coming. Why? Because the clearinghouse issue and the bill for the clearinghouse and market maker is not gonna pass. I don't think it's gonna pass in the near future. It's not gonna happen. That's why the massive covering schema is not gonna happen in the near future. So then all of your liquidity is gonna be dried, and they've already lost 50% of their profit. That's why you see more and more AMC streamers trying to deviate away from their main way of attracting the apes, okay? But I'm not giving up because we're operating in such a low cost stock. It is foreseeable that we can get to our previous cost basis, which some of you are at 8, at 9, at 10, but majority are already averaged down at about $3.5. And for me, I'm still sitting at around $7 point something because deep down I know that it is a horrible idea to double down on losing trades. I'd rather go doubling up on my winning trades. You see? Anyways, if you like these kind of contents, please smash a like button so more and more people can get to these premium content. And no matter what, if you like my content, if you hate my content, just comment down below. What are some of your questions? Ask questions. There's no such thing as stupid questions per se. So just ask any of the things. Like for example, when am I gonna get my dividend? We got that every single video, but still we're gonna answer that in the comment section. And also, if you have any good video suggestions, comment down below too. I mean, we are not even, we operate not only in the MMAT space, we operate in a lot of spaces. For example, my previous cryptocurrency video just came true, right? The $40,000 is not gonna hold. What happened this morning, right? The double exploration happens, and the second everybody got F'd, right? Correct? I was right. My prediction for Dogecoin was correct. My prediction for crude oil was correct. I don't know what to say, guys. Anyways, if you haven't subbed, just sub to this channel, and if you haven't liked, just go smash that like button. See you guys on the upside. And wait for the next video. It's going to be a specific partnership, a breakdown for the Convestral stuff that, I know Sterling has been talking about this, but I have to correct some of the information that he's been giving you guys, because Convestral is actually the supplier. So they increasing their targeted earning has nothing to do with Mana Trail. I mean, it might send out a neutral sort of information, but at the current state, it just means Mana Materials increasing spending and it will increase commitment. That just means George is giving, basically putting more skin in the game. But how many of these lenses or these glasses do you really expect to sell though? That's a more interesting question.